Welcome to the show. Today we have a very special guest. I'm very excited about this one, Hamed Shahbazi. Hamed is the founder and CEO of Well Health Technologies. And I actually discovered Well Health, it was years ago, I think it was 2017, and started buying shares, believe it or not, at around 20 cents. Hamed, you are one of the greatest wealth creators of our time. I just want people to appreciate that, who are viewing this and listening to this. You took Well Health from around $30 million business from scratch, and you parlayed that, you built it into $1.5 billion business. People could have started investing in your company at around 11 cents. Now the company is around $6 per share. And the beauty of that is that anyone could have opened a brokerage account and started buying shares. There's a lot of opportunities that are not available to everybody's, especially in the U.S. with small cap companies. They go through so many rounds of venture capital. By the time of the IPO, they're already a billion-dollar business. So I just want everyone to appreciate that. And thanks for being on. This is a dream for me. Thank you.
Oh no, thank you. That's very kind of you. Yeah, it's been a great journey with Well and previously at Tio, which was obviously public and sold to PayPal. Look, what's interesting about these companies and my journey is that you're absolutely right. They kind of started at a very young age as public companies, whereas you don't see that as much these days. You see companies build out, privately. There's not a lot of accessibility to their earlier stages as a company, and then they come out at like $4, $5, $6, and then they may go up a little
Yeah.
bit after that. But I think having had a journey that started at the very beginning, where not much value was being created, and then really start that journey and allow that incredible accessibility for people to join the journey and create wealth has been really fulfilling on a variety of levels. We have a lot of people who reach out to us and tell us that we funded a house and a new home for their family, or a cottage, or whatever the case may be. So this is one of the things that I love about capital markets and being a public company. There are a lot of things less to be desired about being a public company CEO, but I do think that people are rooting for you for the most part. I do think that even the capital markets, ecosystem, the analysts, the bankers, those ecosystem partners, they want to partner. They want to get behind companies that they can trust, management teams that they can trust, and that's always been my strategy, is to be a product that they can unreservedly kind of engage with and offer to their constituents. So yeah, and this is why I love doing these types of things with people like you, because I think giving a sense to people of how we think,
Hmm.
how we believe that the value creation journey is really just beginning in terms of the total TAM potential of healthcare, the digitization, modernization, and now AI enablement
Hmm.
of healthcare, and the extreme secular kind of tailwinds that are backing us, and the structural advantages that we have as a company. It's really incredible how far we can go.
Absolutely. It's been an incredible journey as a shareholder. And there's just so much to do with the company, obviously. Like, you're not even 7 years, the lifespan of the company. I remember Tio was 20 years by the time you sold it to PayPal, which we will get into. Is it true, Hamed, that was it just one day after graduating from the University of British Columbia that you started what was called InfoTouch Technologies?
Absolutely
It
true.
was that quick.
Absolutely true. Yeah. In fact, I was having conversations around starting it before graduating. So that's why I know for a fact it was the day after, because I was waiting with bated breath to graduate and then officially start the journey. So yeah, no, it's I was one of these people that was sort of raring to get involved,
Yeah.
and became a CEO at a very young age, and it was very humbling, to be honest, because I was ambitious and wanted to do great things, but I had to learn on the job. And thankfully my shareholders at Tio were supportive of that. And I think it's one of the things that people don't talk about capital markets, is that it does actually give you more continuity at times. Whereas, if Tio was VC owned, maybe there's a certain point in time where VCs wanted to get rid of me.
Hmm.
But I acquired some great mentors over time. Great capital allocators really inspired me, and I really started to tune into my craft and the uniqueness with which I operate. And so yeah, I'm kind of unique guy that has now spent over 25 years being a public company CEO at my
Hmm.
age, which is kind of crazy.
Absolutely. But when you first started that business, a day after finishing university, what did your parents think? I've heard you say your parents wanted to be either an engineer or a doctor. So they're thinking, Hamid's becoming an entrepreneur, really?
Yeah, I know. Well, my mother was the one that really wanted me to be a doctor. My father, was an engineer. He is a PhD from Berkeley, really smart guy, and I really looked up to him. And I think that that played a big role for me to want to go study engineering. But
Hmm.
studying engineering was great in terms of evolving my technical aptitude and my ability to just build tools to problem solve. But what I realized is I wanted to solve different kinds of problems
Yep.
than dams, bridges, and load paths. Uh, and so, I graduated at a really interesting time when literally it was the dawn of the internet,
Yes.
and AOL was sort of, the biggest and most interesting asset in the marketplace. And I had an AOL account and I overused it and I was paying hundreds of dollars a month and my dad got really mad at me and, I had to curtail my usage and, 14.4 modems and all that
Yeah.
kind of stuff. So, and so at that point in time, you could see that this was going to be a really big tectonic and fundamental shift. In fact, it really feels the same way right now with AI.
Mm.
Sure, we've been through other transformations, the mobile and, obviously different speeds and, connectivity. And certainly all of them have been enabling and creating access for new types of applications. But I think AI is that next big fundamental step. Some people will tell you that it's even much more important than even the dawn of the internet. But I would say they're kind of similar in scope because everything went from just being offline
Yep.
to now being online, and now AI gives us an entirely new context of productivity. One that if we do not embrace, we will somehow be subverted by. I
Hmm.
think is really the view. Now, whether or not you believe that jobs will disappear as a result of AI, they certainly will be changed.
Hmm.
And so I think it goes without saying that we all have to be incredibly focused on embracing this new path. And I think it's coming on a lot more quickly than people recognize. And I think it's just a remarkable time to be alive, but it's also a bit perilous, right?
That's really exciting. But in 1997, I believe Amazon IPO'd around that time too, and there are so many doubters in Amazon and doubters overall of the internet. It's going to go the way of the facts very fast. What made you such a big believer in the internet in 1997?
I think it was just the notion that I had a job, a summer school job where I was selling ads on public kiosks that were public information kiosks. And at that time, we were updating the media. These were on, it was very advanced for the time. They were touchscreen kiosks, and
Oh
we
wow.
had the ability to have, people walk up and operate and navigate and find out where the closest restaurant or convention hall or event would be. And we would be updating that information physically. We would
Yep.
literally be running out media to these various kiosks located around the greater Vancouver area. And I would go out and sell ads, and I would sell ads, and people were really interested in what we were doing. And then the idea that suddenly now we could put a modem and we could ship information and it could update after being remotely. I mean, it just really turned my mind on around this kind of digital quality that's starting to emerge in the world. And at that time, people were calling the internet a fad. They were
Yeah.
like, "Oh yeah, that'll blow over." And I think pretty quickly you could see it didn't take a genius to figure out that this was going to be hugely disruptive. And
Hmm.
I basically dropped everything and wanted to be a part of it. And that's really the beginning of Tio, was effectively creating apps for self-service automated kiosks. And the app that really took off were the financial payment apps that later essentially became the business of Tio. And what was interesting about Tio is that it was a windy road and where
Hmm.
we had to pivot numerous times. And it really helped me come to terms with the role of an operator. The role of operator is not just to build a business plan and see it through, but it's to identify those pivot points, make those changes, and the more resistant you are to change, the less powerful you are. We all understand that about the power of flexibility, but this is a lesson that I learned early on, is that if and I think, you know, a couple of those turns I was a little slow in adopting, and I started to catch on, you know, over time. And eventually, you know, we pivoted our way into a you know, $300 million plus exit.
Yeah. And so for people who are not aware of Tio Networks, which was InfoTouch, he changed the name, I believe, because Tio means uncle, right, in Spanish.
Yeah.
I'll ask you about that and who came up with that name change. But basically, you'd walk into a Circle K, and there'd be an internet-enabled terminal right there by the snacks, maybe. I'm just trying to put myself in that era. And you could walk up to the terminal, you could email on the terminal in 1997. You could sync your Palm Pilot, which, you know, the younger viewers will have no idea what the hell Palm Pilot even is. They can look it up. And you could video conference too on this terminal in a Circle K, in a gas station or a convenience store. And as you said, the killer service that you finally discovered was bill payments. And I believe that enabled people without bank accounts, they could insert cash, is that right, into the kiosk, and they could pay their bills online with cash they entered into the kiosk, which is brilliant at the time.
Yeah, no, it was very interesting. This was at a time when you had some very innovative people at these sort of downstream oil companies that were trying to figure out a way to attract people into the store, back into the store again. Because a lot of people were
So it's a
paying.
win-win for Circle K.
Exactly.
Yeah.
And so they kind of thought about this as kind of like an e-enabled place for all these different services inside. So, you know, don't just come in to get your smokes and cokes, but also come in to retrieve your email.
Yeah.
And really, we didn't know what was going to be the app that was going to really work. And what we ended up doing is we effectively, let me just silence that. There we go. Yeah. So what we ended up doing is we, you know, tried a bunch of different apps, and what really resonated was the ability, because remember, you look at the type of people that are going into convenience store again and again and again. That you know, sort of habitual customer that's getting their, you know, Friday night beer there, their morning coffee there, not getting it at Starbucks, but getting it at a Circle K. You know, they had a greater inclination to be cash based, especially in certain parts of the United States, and so the ability to then put cash into a terminal, immediately digitize that cash, and know that you have read that cash, it is secure now, and we can give credit for whether it's, you know, wireless mobile top up, your bill payment, a money transfer. This really resonated, and it was great because, you know, we all know that using a self-service automated terminal, even in a checkout scenario today, is you know, oftentimes a lot better experience than waiting for a cashier, and so.
Yep.
So that's really what really caught on, and then we really dug deep into that marketplace and established you know, back end termination links into all kinds of different mobile companies and for top up and bill payments and all the different power companies, and we were then able to essentially reduce the latency of payments posting. And that's ultimately what became very valuable, is to own all these rails that would connect from the origination of cash into the back office of these billing systems. And it was a painstaking company to build, because you had to go out and build all these links, and you had to acquire the customers, you had to service the terminals. But, you know, it was a wonderful way to learn how to build companies, and it was evolutionary for me in my thinking in terms of what do I want to do next. I would say that the journey with Tio was hyper dependent on various different companies. It was a middleware solution for the most part. You know, I needed people to help me acquire the customer. I needed to, you know, work with a lot of people on the back end in order to make sure that there was value, because if we couldn't post payments in a timely way, and that required integration, that required agreements, that required a lot of work, then we didn't really have a value proposition. And so, you know, I would say that the TO business was a dependent business. It was dependent on others. And you hear this a lot, where there are companies that have long sales cycles. It takes them a long time to build out their network. They end up usually being very valuable, because once you've got that in place and it becomes entrenched, it becomes valuable. But from a thinking perspective in terms of, okay, taking all that experience, how do I want the new business to go? It's very important to me that I have more independence in my business model, the ability to innovate without too many people to depend on to green light our progress. And so this is why the first thing that I did at Well was acquire a number of medical clinics, and really start to see if we could be helpful in supporting doctors. The thesis was, doctors have two roles to play in clinics. They're providing care and they're operating a business. And the view was, well, that can't be easy. These are very smart people that are, went to school for providing care, and they've been sort of forced into running these small businesses. And while they could probably do them and it's been going well for a long time, now all this digital disruption starts to creep in terms of electronic medical records and connectivity and data protection. And then, of course, with COVID, it was, on and offline flows and virtual health and virtual care and so forth. So this has just become more and more and more difficult for these clinic owners, which are also doctors, to be carrying out these things. And so, being able to just help them, without needing, all these other things to happen. And initially it was just a bunch of over-the-counter, technology or accessible technology that was not customized for us that was used. And we were able to determine that we can help them. We are seeing margin improvements. We are seeing, better operations at these clinics. And that really encouraged us to then go out and lean into technology. So that ability to be independent and grow has been a big part of why Well has been such a big growth machine.
It's been a huge growth machine. There's so much more potential. I was talking to Tom Liston the other day. I think that Tom said that the market share that you own in outpatient clinics across Canada is only 1%.
That's correct.
So
yeah.
There's so much
untapped
untapped potential.
We're bigger than probably the next 5, 6, 7 competitors combined in terms of number of clinics, number of physicians, number of patients served. So it's a pretty remarkable situation to be in, for sure.
That's just remarkable. And before we delve deeper into Well Health, a lot of people want to know more. I have to ask a question. Who came up with a name for Tio Networks? Basically, Uncle Networks. I'm totally curious.
Yeah. So I think it was like a group of us. I remember it came down to Tio and my Tio.
Yeah.
But we were all kind of resolute that we wanted to we really wanted to pay homage to that, Spanish immigrant, Latin immigrant coming over the border that was driving a lot of cash preferred behavior in the United States. And a large group of these sort of low to moderate income demographic folks, at the time I remember we were talking about that there are 20 million American born underbanked or unbanked people that were frequenting in retail financial services. And then there were, a similar number and more coming over the border over time. And so that was sort of the idea and then really it got us sort of thinking about, well, what the idea of an uncle was very comforting. So aside from the fact that it had a Spanish connection, we felt that in our brand studies, we found that uncles are revered. They're people that we look up to. They're people that push us in the right direction. They're not around long enough to get on our nerves for the most part. There's a lot of brand values of warmth and trust that we sort of endeared around the word Tio. And it really worked for us. Like the company really got behind it, and it was a very exciting name change for us. It really brought a lot of energy and momentum. That's
really interesting. Thanks for sharing the thought process behind Tio. And I think equally, the name Well is just genius, right, in itself. So Well Health, I believe I read somewhere, I think it was McLean's, where it said that you're really upset and discouraged and disappointed navigating the medical system when you're helping your mom through something that happened, and that was really the start of the idea. Okay, we need to improve healthcare for Canadians.
Yeah. Look, my mother went through a very challenging diagnosis associated with non-age related neurodegeneration.
Hmm.
She got this. She had the same illness that Bruce Willis has now, the FTD, frontotemporal dementia, and it took us so long
Yeah.
to find the right diagnosis. We had to, and it was really hard, right? Like
Hmm.
it was even just getting an image done, like neuroimaging done, and then get that media and be able to take it to another imaging center or take it down to the United States or take it to another hospital for analysis. Like everything was difficult. It required multiple rounds of follow up, and it was just surprising for something that important as to how much friction there was. Now, look, there's friction for good reason in a way with healthcare because you're talking about the most important sensitive data, but there should be clarity in terms of how to alleviate that friction, and I didn't really see a lot of that, and so it really just got me curious around
Hmm.
the development of this industry as a whole. And as an entrepreneur, you're there to solve problems, and here you are. This is the biggest TAM in any services economy in any of the 40 countries that have modern medical systems, and these are huge amounts of market share in terms of revenue and financial activity, and there's so many problems. And the more I sort of talked about it with people, and I was just like kind of flabbergasted by the challenges, and yet the view was, this industry is really not being digitized at all. And how could that be when there's been so much extreme digitization that's occurred globally in so many different sectors? Experiences are so digital in so many different areas. And the view was, well, look, it's just a matter of time. Now, some people were arguing against that. They were saying healthcare is one of those areas that will just never digitize, or it will be digitized to a limited degree because of the connection that physicians and patients need to have and whatnot. And I just really didn't believe that. I felt
Hmm.
that no matter what, healthcare would digitize, and it was just a matter of time. And people said, well, how do you know if it won't be decades? And my view was that it was more generational than anything. That
Hmm.
that
Mm.
that if you were a baby boomer or Gen
Yep.
Xer or a millennial, you looked at these things very, very differently. Like if you were
Hmm.
a millennial doctor coming into rotation, you're starting to think, what do you mean people can't go online and see me? That makes no sense. Like that can happen in so many different use cases that I've used before, and it makes no sense because I could see my patients in a much more convenient way for them. And so my view was that eventually, different generations with different perspectives would will that to happen at the provider end of things. We knew that the patients wanted more accessibility,
Hmm.
but providers weren't ready to go there. And I think COVID then created that multi-year acceleration because they were sort of dragged kicking and screaming into this, physical distancing world. And we went in Canada from 0.25% penetration in virtual care to a peak of 80%
Wow.
during COVID. And then, of course, it's now settled back down, but it's still at least 40% virtual now. So
Yep.
this industry was forever reshaped, and I think for the better, right? This has created an enormous amount of accessibility and convenience that didn't previously exist.
It was really exciting, Hamid, being an early shareholder of Well, because the press releases were just coming out, it seemed, every week at that point. In parallel of you buying clinics, you're on a buying spree of electronic medical records, EMRs. Talk to the viewers about that strategy of just that huge buying spree early on.
Yeah, well, I think after we recognized that we could make a difference with healthcare clinics, with owning, operating, tech enabling them, and we were using other vendors, other electronic medical records companies. We started to recognize that if we could do more with those companies, if we could create custom flows, if we could have more influence in terms of how this technology was developed, it would
Hmm.
better our lives as clinicians. So that was really integral for us, and we started to recognize the importance of EMR and of practice management software. And so in understanding that, we really started to look at the marketplace, and we saw that there was, kind of a cottage industry of open source EMR operators under the sort of the acronym of OSCAR, which
Yep.
stands for Open Source Clinical Application Resource, which is a open source project that McMaster started, with over $10 million of funding, and they open sourced it, and they had hundreds of physicians contribute to it, lots of developers, and it grew into an industry-wide success that at least 20% of all physicians in the country joined, but through not one company, a variety of small EMR operators that were sort of professionalizing and securing this open source software, much in the way that, say, like a Red Hat would do for Linux. And to me, and at that time, this group of OSCAR service providers was sort of seen as a little bit like a ragtag open source, kind of cottage industry. And in speaking with the folks at McMaster and Public Health, we recognized that there was a security issue that could emerge if these small EMR operators are not professionalized, just given the importance of this data. So we undertook to not only acquire and integrate these into one entity, but to vastly professionalize and secure these businesses. And so we bought 4 cybersecurity companies. We started to do a ton of work in terms of professionalizing these businesses, moving them to the cloud, away from on-prem unit locations. And I'm really proud of the work that we've done, because I think people don't recognize just how much we've secured this data compared to where it was before. And I think this is a story about Well that I think a lot of people don't recognize it. They recognize the value creation journey. They recognize kind of the deliberate and transparent approach that we took to generate that value with organic and inorganic growth. But we've made healthcare a lot more safe and secure and private in the outpatient model. We've also created a lot of accessibility. It's very appropriate to say that lots of clinics would literally not be around had we not acquired and created a sustainable business proposition. If you just look at major acquisitions we've made in the last couple of years, MCI One Health was the largest chain of clinics in Southern Ontario. It was days away from perishing when we bought that. It is now a profitable, sustainable operation that's supporting hundreds of thousands of patients. Recently Jack Nathan was having challenges with their Canadian business. I could go on and on. We've done that repeatedly, and the major benefit, and this happens every day. Clinics go bust. They are private P&Ls, even though the claims are paid for publicly. It's doctors and their friends that own these things. They are signing their names onto the leases, and they have to pay that rent at the end of the day. Yep. And if not enough people are coming through and they can't pay the bills, they have to shut down. Yep. And people mistake that only for private healthcare. 99% of our healthcare here in Canada, are privately owned and operated clinics, but most of them are publicly funded, and as opposed to a small subset being, consumer funded, which is obviously more the second tier healthcare concern.
Yeah, and then Jack Nathan, for people on the video here, put you into all the Walmarts basically, and so you continue to expand your footprint. So what did MCI and Jack Nathan get wrong, Hamid, that you figured out the secret framework to, and the secret blueprint to basically transform and improve the economics of these clinics?
It's really hard. It's a really hard business. Primary care, especially, and we're not just in primary care. We're in specialized care. We're in diagnostics. We're actually the largest provider of diagnostics outside of the hospital channel in Ontario. We're the largest owner of licenses in the IHF framework. But what makes primary care so challenging is this low margin. You got doctors who need to, kind of change habits and behaviors and workflow. And it takes a lot to get in and change those habits that have been entrenched for so long. And so over time, we've come now with a lot of confidence, with a lot of proof that, doctors and clinics can operate on a certain level of what I'll call non-physician MOAs, medical office assistants and whatnot. Most clinics overspend on non-physician wages, but you can't just dial down those people unless you implement technology, unless you implement things like online patient booking. If you need to literally take hundreds and thousands of calls per month to get all those people in and out of your clinic, you're not going to be able to be profitable unless you really execute on online patient booking. And we've met people that say, gosh, you know what? I implemented online patient booking, but I don't get much usage out of it. And what we've done is not only implement this technology, but not only train staff, but also train patients. We've trained patients. You say, well, how do you train a patient? So it takes months. You sit there with staff as people come in, as people call, one by one, you train them. You tell them, can you please, next time that you call, book this online? I'm going to give you the URL. And then you create better experiences with less friction. You make sure that everyone's, all the doctor schedules are available. All the doctors are participating. And if you execute on that kind of stuff, you start to take away the need for people in the clinic. And if you can't do that, it's really hard. It's just really hard to run these businesses in an economically sustainable manner.
In your wildest dreams, did you ever think you were going to catch the attention of Hong Kong billionaire Li Ka-shing? That is just an incredible story, and I believe a major inflection point in WELL Health.
It really was. No, of course not. You can always dream, right? But I think what was really interesting about that is I met Mr. Lee's partner Selena, and I just befriended her. We just connected and stayed in touch and shared thoughts, and she was a spectator on Tio PayPal, and was never an investor in that company, but we got a sense of each other, and when I was in Hong Kong, on a personal trip, I reached out and I wanted to meet up with her. She instantly agreed, and it was kind of an interesting opportunity because it was right at the time when Well was just starting to take off as a company, meaning like when I say take off, I mean just like start as a company. And when I told her what I wanted to do, and the objective of building out a network and digitizing and modernizing, she instantly said that her and Mr. Lee wanted to own 20% of the company. and literally within a week, the deal was done. 19.9% of the company. And that was incredible. And look, to this day, they have not really, reduced their stake. In fact, they grew it and grew it and grew it, and now they've combined it between the two of them. So it's been a huge, shot in the arm for us. Of course, he's kind of widely considered to be Superman in Hong Kong, and
the Warren Buffett of Hong Kong. I've heard many times. Yeah,
and that's allowed us to get connected with a variety of other people. They're just being super supportive, and they've made wonderful introductions to us. So we've been, incredibly grateful, for that kind of sponsorship.
And if we look at WELL Health today, I was just reading your investor presentation deck. 1/3 of healthcare providers in Canada rely on technologies and software from WELL Health. $1 billion revenue run rate now, basically. I think you're right there. The market cap, though, is $1.5 billion. Do you think that Canadian funds and investors are still sleeping on the opportunity? Because I've talked to some fund managers and investors since day one to start owning your shares at 17, 20 cents, and they were doubtful then. And I still see the case now where it's not as widely held as I thought it would be. WELL shares.
Yeah. So look, I think we went through a time with the pandemic where digital health companies became probably enjoyed some exuberance and were valued more than they should have been, and even though the industry, is alive and well from an operational perspective. I think that value decline that occurred after the COVID period, it took some time for that to settle down, and for stories like ours to kind of not be considered a COVID story anymore, if you will. And I think by demonstrating our growth, our not only our inorganic growth, but our organic growth, because we're at 20% now. We have been for a while. Our continued profitability, the free cash flow generation.
Yep.
As we've sort of demonstrated these things, I think we've started to get a lot of that institutional support back, and I think people recognize, no, this isn't about COVID. This is about really digitizing and modernizing a particular asset class that's highly resilient. And also there's very few people that have been successful in doing it. And so we're at a, enterprise value of about 1.8 billion now, market cap of about 1.5. And the last several months we've enjoyed some expansion in our share price. And I think it's come from a lot of hard work and trying to demonstrate that we do have a number of very valuable parts. And so early last year, we really, at our investor day, started a big focus on realizing sum of parts value. And so, and I think that's been something for shareholders to really consider is, well, you've got all these businesses in the US, you've got these businesses in Canada, where are you going? This notion, when I was investing in the US, I thought that it just made the business more resilient. As an investor in Well, my viewpoint was you're going to have exposure to not only different types of disciplines of healthcare, right? Primary care, specialized care, diagnostics, but also different jurisdictions, different payer models. This is going to create a more resilient business with the true north of tech enabling that healthcare provider and getting efficiencies and better outputs and better patient outcomes. And I really believe that, and we've executed. Our US business is growing and is very healthy. Our Canadian business is growing and is very healthy. I think what I found with institutional shareholders is that the US healthcare market is so different to the Canadian one that people find a hard time imagining how a cross-border healthcare business works. And over time, they've come to really fall in love with our Canadian business because we are the market leader, and they'd like to see us lighten up in the US. And that, while I think our US business is great, I agree with that. I think it makes a ton of sense. Like if you think about what we've been saying in our conference calls the last few months, we're about 1% market share here in Canada for physician spending, and we think we can get to 10%. And there's literally no one in front of us except for us. It's all up to how quickly and in a disciplined fashion continue to execute on that market opportunity and deliver absolutely great service to physicians and their patients. And that kind of an opportunity does not exist in the United States right now because for whatever reason, we're not seeing private equity sponsors that are everywhere in the United States in healthcare. We're not seeing them approach the Canadian market with the same amount of zeal. And I think a lot of it has to do with not understanding how the market works here. And we have a huge head start now. I mean, we're going to be tough to catch. So I think, and now that our cash flow is growing, we're truly in a compounding state because we don't have anywhere close to the amount of dilution. In fact, we started to buy $10,000 worth of stock every day since March of last year through the end of the year. And we'd like to take buybacks back even another level as we liquidate some of our U.S. assets and continue to grow here. So I would say if you really dig into where the Well story is at right now, and the ability for us to acquire at very low cost and sometimes no cost and expand margins in a very mechanical way. I mean, I don't think there's anything like it that I understand out there. If I just had one elevator ride with you and you say, hey, I've got an elevator ride, tell me why I should buy your stock. I would say, look at our ROIC figures. In the last 3 years, we have a 30% ROIC in the cohorts of our 22, 23, and 24 acquisitions. We are the market leaders with 200 clinics, bigger than the next several competitors combined, and we have a virtually unlimited TAM to prosecute. And we have a replicatable business model. Within a year to 2 years, we can increase operating margins by 1,000 basis points. And our cash flow is increasing dramatically as our earnouts decrease, as our business gathers momentum. And it's pretty easy to quickly determine, wow, okay, this company's got something.
Yep.
It's got the tech, it's got the structural advantages in terms of having built a network. It knows how to deal with doctors. It has a great brand. And it's very important to me that we maintain that quality level. And so at the cultural level inside the company, in terms of the commitment that we have to physicians, because they're our number one commitment. People say, well, why isn't it the patient? Because it's the physician that takes care of the patient. And our healthcare ecosystem, the backbone of that is still humans. It's still doctors. And we want to make sure that we're there for them. But that's not going to change for a long time. Even with AI, AI is going to help the doctor become a better doctor, but it's not going to replace the doctor for a long time. And even if it replaces part of being a doctor, it's still going to triage into a doctor. And so this is why it's so important. Our mission and vision is so powerful right now at a time when healthcare is under pressure.
Yeah, that's just an amazing elevator pitch. I think if someone hears that and doesn't invest in the company, I think they're probably insane.
Thank you. And I went 2 elevator rides there, but I went, but you got the first part.
Absolutely, and I think 2 things I would add is number one, you're in the right business. It's recession proof.
Yeah.
Someone might cancel their Netflix subscription if they lose their job, but they're if they've got the sniffles, they're absolutely going to go to their doctor. And then number 2, I think it's something like 98% recurring revenue. That's just a beautiful thing. So tell us more about, and this is a good segue, you alluded to this, but shortly after your investor day, I believe it was June last year, you made the announcement of what's called WellStar. Can you tell us more about the strategy behind WellStar and some of the plans that you can actually state publicly?
Sure. Well, look, I mean, we have a very successful SaaS and services business within Well. 38% of all physicians in the country touch our digital platform. Yep. And we have truly recurring subscription revenue there. If you looked at that tech platform on its own, it's a very successful software company that's growing at rule of 40 to 50, depending on the year, consistently, right? And we just found that over time, as the care side of the business was scaling, people started to forget the fact that there's a software company. When you've got $1 billion in revenue, most of it's care, it just vastly overshadowed the fact that there was a software business there. And so we didn't think that analysts were properly giving us credit for that. So that's one of the things that we set out to do is to demonstrate that part had more value that was being attributed, by analysts. And so we basically stopped a kind of a 3-year focus on pure integration with no M&A in our tech business to make a couple acquisitions, and we raised $50 million into the equity of our tech platform, which now we call WellStar, with the purpose of spinning out WellStar as a separate public company that would be owned majority by Well. And so we found, and we were very intentional as to go out and find the best investors we could that would do a lot of work and that were notorious for doing that work, because we know that in these sort of carve-out type situations, it's really important to demonstrate, great governance and be able to get people comfortable with how that was going to work. And so, with the guys at EdgePoint, Pender and Maurer, Maurer, of course, being the biggest investor that leaned in. These are people known for doing their work and to really lean in, and they did. They hired consultants and they spent months, really leaning in. And I think that the fact that was $50 million at 4 times next year's sales was, I think, definitely higher than what analysts were attributing to us. And I think it was one of the catalysts that moved the stock at the tail end of last year. And I think you're going to see that WellStar is going to be a really valuable, not only in terms of its commercial value, but I think in terms of its societal value, in terms of bringing technology to the Canadian ecosystem. And I think it's going to be $1 billion plus business at one point in time, not too distant future.
Could this spinoff happen this year, or will it happen the year after? What's the thought?
I think it could definitely happen within a year. I think
Okay.
it makes a lot of sense for it to happen within a year. I think we want to get to as close to 100 million in revenue
Yep.
before we do that. But that's not a difficult consideration, just given how quickly we're growing right now and the M&A prospects that we have.
Well, that's exciting. As soon as those new shares land in my brokerage account, I'll just accumulate more. I'm not going to sell. Okay, so I know you have an important meeting coming up. So let's just go through some of my biggest questions here. Hamid, we talked a lot about the business. Personally, though, I would love to know, how do you stay healthy personally?
Thanks for asking. It's a big thing for me.
Yeah.
You can't be the CEO of a health care company and not be authentic around the importance of personal responsibility for healthcare. And I think that's the thing that most people, or a lot of people, get wrong, is that the view is that, well, who can I go see that will make me healthy? And it's like, it's all about personal responsibility. The silver bullet in healthcare is personal behavior. And so, look, I think there are a couple of key things that I really believe, and one of them is movement is medicine. So I really do try to move every day. I try to make sure that I have a certain number of steps. There's an incredible body of evidence that shows that the higher the step count, the greater the circulation in your body, the better that your body will feel and act over time. And so, even there's folks that get 2,500 steps a day because they're driving to and from work, and they've got long hours, and they don't get a chance to get out very often. Just when they go to 5,000, it's a huge difference. Doctors are saying if you can get 10,000, that's an ideal place to be. Well, my average for the past year is about 18,000.
Wow.
I try to get 20,000 a day. So we'll say, how could you possibly do that? That's 4 hours of walking.
Wow.
Well, a lot of my calls, I try to just take outside whenever I possibly can, or indoors. I'll just try to get the AirPods on, and I'll try to have I'm not doing a lot of carefree walks in the woods, just by myself. I don't have a lot of that time, but I think any time that I can, and even I have a walking desk, like I literally can work and walk at the same time. So I'm really committed to that. The other is I have a real commitment to my blood sugar. So most people, are probably not as focused on this than I am, but they really should be, because most of the inflammation that happens in your body has to do with what you consume, how you consume it, in order in which you consume it, and how that affects your blood sugar. And it's that blood sugar, those blood sugar fluctuations that can cause a lot of damage in your body. And so I intermittent fast. I try to break my fast with whole foods that are protein and fiber rich. These are the things that, like, if you do these things over time, I think it can really extend your life and give you the energy that you need to really execute on your life. I mean, if I was dealing with all kinds of different, bad behaviors, there's no way I could work the amount of time that I work at Well and devote myself so fully to my job.
That's really interesting. But the downside is that you might not ever have to step into a Well Health clinic ever in your life. Be so healthy. I remember hearing that you mentioned you saw a guy on Twitter, on the old Twitter, now X. He created an index, and the index was publicly traded companies. I think it was in the U.S. where the CEOs work out. And the findings were that group of companies where you have these very ultra healthy CEOs, those companies do better than the S&P 500. I would obviously lump you into that group if we were to create one in Canada, but that's super interesting. Why is there a correlation, do you think?
Yeah. Well, it's interesting because the third thing I was going to say is weight training, and I try to do weight training at least 3-4 times a week.
Yep.
And it's incredible, again, for metabolic health and blood sugar. And what people don't recognize is when you work out and you do resistance training, your muscles are literally acting as mini vacuums that are sucking blood sugar out of sugar out of your blood, which is remarkable.
Yep.
In addition to all the other benefits, look, I think when you are devoted and you demonstrate a certain ability to be disciplined, whether that is to working out or some other thing that betters your life and puts you in a better position. Again, I think running a business is so much about discipline. It's so much about good behaviors, and I think I always sort of think about this, and I really believe in it greatly. As a leader, your strengths and weaknesses will be reflected in your world. And so I see it sometimes, I'll look at strengths and weaknesses that Well has, and I'll say, gosh, I can see my weaknesses, my strengths manifest here. And it's not a braggadocious thing to say. It's just the way nature works. It's like you're making decisions, you're doing things that and you have a belief system that is ultimately responsible for these strengths, weaknesses, opportunities, and threats. Yep. And so if you are living a healthy lifestyle, that is a mind frame. And so you are injecting that healthy belief system around you. It doesn't have to be about health. It's about any aspect of running a business. So I think there's a lot to that, actually. I think the more we can break down leaders and their companies, I think the more that we'll see heavy correlations in terms of their actions, their belief systems, and how they manifest themselves.
It's all very holistic, exactly. Is it true that Steve Sadler of Enghouse Systems, he's been a long-term mentor of you?
Absolutely. Okay. He's
Can you talk more about that?
Yeah. No, look, that was one of the things I was thinking about when I mentioned mentors back during the TO days. I mean, he's an exceptional capital allocator. He's an exceptional human. He became a shareholder of TO and took an interest in meeting, and I would literally I probably had dinner with him 50 times.
Oh, wow.
And literally I would just ask him question after question. He was just incredibly generous with his time. He's probably one of the most fascinating and intelligent people that I've ever met in my life. And I think if there was a book about capital allocators, Canadian version, like there's the one that Warren Buffett recommended called The Outsiders that profiled 8 phenomenal capital allocators that are U.S. based, including him. I think if you look at Canada, he would be right there at the top of the list along with Mark Leonard. And so I feel pretty grateful that I had that chance to be his mentee.
That's amazing.
I'm not sure we called it a mentor-mentee relationship. He was just a great friend, and he'll never know how grateful I am for that.
That's just amazing. And what is the biggest lesson he imparted on you when it comes to acquiring assets for Well Health? Totally curious.
The importance of making money, like the importance of being tough on the expenses, the importance of counting the pennies, of being disciplined. He's the most disciplined person that I know by far in terms of how to run a business, in terms of how, multiples. And I think the model that he has created, and now replicated a couple times is pretty incredible. So I think it's discipline for cost, discipline for what you pay, and that's it's a constant reminder.
That's amazing. Last question: if you're to tell the viewer here to read a book, if they want to break into the business of investing, tech investing, what book would that be?
The Outsiders by Thorndike.
Outsiders. Okay. Yeah, that's a fabulous book. It's absolutely amazing.
Yeah.
Okay, this is awesome, Hamid. Thank you so much for your time. I wish you the best success with Well Health. I just can't wait to see what's next for the future.
It means a lot. Looking forward to sharing more of the journey with you and the other shareholders that we're lucky enough to have along with us.
I can't wait. Thank you again.
All the best.